Bitcoin and Ethereum are both at critical breaking points. There's some potentially really nasty stuff that could be about to happen on these charts, but there are also some really nice opportunities here that I'm going to be breaking down for you in this YouTube video. And really, we have to start with Bitcoin. I do want to talk about Ethereum. It is the star of the show today, so wait for me to get there. But before I even start on that, Bitcoin is still going to be what I need to start with. And just bring to your attention again how, Bitcoin has continuously been forming these patterns where we would trend lower and then slowly fight the trend by rising higher in a rising channel, ascending channel, rising wedge, whatever. There's a million names for it, but they all mean the same thing. And then eventually the market drops down again, and we are doing exactly that right now. We've continued to do that pretty much over these last 5 days. We've been stuck in this range now for 5 days where we've been slowly ascending higher. And the reason that we're at a critical point right now is if you take a look at this green box right here. Let me make it very clear which box I'm talking about by making it orange. Oh, I'm sorry, that's the line. If you look at the green box right here, which I can't seem to move right now, bam, right there. This is a very, very important level in the markets, in my opinion. And the reason I'm saying this is because if you look at when Bitcoin ended up falling down into this range originally back in June of this year, we actually were finding resistance quite predictably at this price level right here. This price level, by the way, for those of you on mobile, is 21.5 up to 21.7, 21.8. And so that is, pretty much exactly where we are right now if you look at our current price level. So this was an area that was acting as resistance. It didn't really, we got one small and another small support hit right here, but nothing crazy. It didn't really act as very good support, but it did act as good resistance, which is important because right now we are potentially finding resistance in this range again. Now, the reason that this puts us at a breaking point is, well, if we're able to break above this, that's a really good sign. You guys will remember, if you've been subscribed to this YouTube channel, smashing up those likes to show your engagement and just to make sure that you do keep up to date with all this time-sensitive content. You're going to remember very well that I was saying there are two key ranges that I'm looking at. I've got the line at, I don't think the line's on this chart, but it was like 22.8, or basically the bottom of this range right here, as being one very important level. And if we lose that, I said that our next support that can help us, in my opinion, would be 21.7. Unfortunately, that didn't even help us. But the good news is that if we are able to break above this range, we should be able to get to that next key area of resistance, which is going to be this box right here. Those of you, again, who have been watching regularly will remember that this price range that stretches between 22.7 up to 24 was the exact same price range that Bitcoin was consolidating in when we first got the breakup. This right here, you take a look at this, very, very nice big moves. The trend pauses right here. See, it's trending up very aggressively. It pauses here very briefly and then continues going up. This price range is the yellow box that I just showed you. It's Bitcoin's next potential area of resistance. And if we translate this over to Ethereum, the good news with Ethereum is that it's picking up some strength against Bitcoin again. I was saying that I was expecting a little bit of a drop. We got quite a substantial drop, and now we're moving back up again. And the thing with Ethereum is Ethereum's current area where it's trading in is the major area of resistance that I'm seeing. But there is a huge potential rally to be seen if Ethereum manages to break above this, all the way up to the mid $2,000 range. And that's going to be if Ethereum is able to substantially rise above this $1,800 level. But this is kind of the problem that I'm seeing right here, guys, because if we take a look at, well, let's look at the fear and greed index. Wow, look at that. We're back down to extreme fear. Beautiful. That's what I like to see. We have been moving down a little bit. You can see this trending down over the last days, over the last basically week. 1 week ago, we were at a reading of 30, 33, and now we're down into extreme fear again. So that's absolutely beautiful. But the way sentiment picked up pretty quickly on this rally, everybody was talking about all-time highs for Ethereum and so on. Obviously, that was a little bit premature. This is a potential area where, if people do start to get excited again, I don't want you guys to forget that this is actually resistance. And the fact that we managed to get above it once doesn't necessarily mean we can do it again. This market has been giving us a lot of deviations. For example, we had this beautiful ascending triangle pattern right here, but look, we deviated below it, and then we went back up. So essentially this is what I would call a fake out. The correct word is deviation, and so, you know, it's very possible to say that this was a deviation too, you know, and we're potentially just going to find resistance here and continue trading lower. So this is what I'm looking for right now. You know, we have now unfortunately set a lower low. If we take a look at the lows that Ethereum has been setting, let me just circle them for you. So, you know, overall we were setting higher lows for Ethereum, but this low right here is lower than this low here and this low here. So we have swept our prior two lows. We've even got, like, on the weekly time frame, you look at the weekly chart, we've even got a bearish engulfing candle right here, you know. So and I haven't really spoken about this very much. It's Thursday now, so it's a little bit late to talk about it, but you know, we have engulfed the last 2 weeks of trading action with that previous weekly candle. Bitcoin is even worse. Bitcoin engulfed the previous 1, 2, 3 candles with this one bearish weekly candle right here. So again, these are all displays of how we've lost a lot of momentum, you know, things that you know, you might not like to pay attention to, but obviously that's why you come to this YouTube channel. We don't really care about those things. We're not about the emotions. This is all about the facts. And yeah, you know, there are some early warning signs that we could be entering a downtrend, and one of them is when you fail to set a higher low, and in this case that is exactly what we've done. So if we now do the next thing, which is failing to set a higher high, so for example we trade into this range and then drop back down, you know, that would be a pretty nasty sign. It would actually paint, you know, like a head and shoulders of sorts as well. You know, these kind of patterns are representations of essentially what is, you know, the market just not having enough strength to push higher. And the reason that all of this is really significant, ladies and gents, is that we're still in a bear market overall, right? I mean, you know, in order to get out of a bear market, we have to, you know, meaningfully punch above some of our previous highs. And, you know, I mean, for Ethereum, that's going to be up here at like 3.6. It's really far away. And so, you know, when we consider that we are in a bear market and we look at how much this market has actually been able to rally, you know, by more than 120% from its low to its high, that means Ethereum more than doubled, guys, within this time frame. Bitcoin didn't do anything like that. Bitcoin still moved up by quite a bit, but its rally was only 40%, which is still quite substantial. You know, well, then we can consider that, you know, given that we had, and this is the thing, guys, is we had all the same textbook signs of people getting excited, you know, with the fear and greed index peaking at 47. I think it peaked at like 49. I don't know why I'm remembering 49 specifically. And then we looked at things like the longs, you know, which are still weighted towards, you know, the long side. Still, many people are trading the long side, which is yet another indication to me that we're probably not going to be trading up, because, you know, this is, especially Binance, you guys know the deal with Binance. This is where all the new traders go. It's not necessarily where the most skilled traders are. And so, you know, it's a good indication if we see a lot of people going long. We don't want to be following them generally. I mean, it's up to you, of course, but for me, I don't like to be following what the masses are doing. I don't like to be following what the beginners or just poor, you know, lower skilled traders are doing. And right now on Binance, many of them are taking up long positions. Bybit, somewhat similar, slightly majority long. FTX definitely is majority short, so that's a good sign right there. But, you know, we do still need to be flushing out some of those longs, and I think that's yet another factor that could be playing into this market right here. What I do like I said, is that we do have this fear and greed rating at 25. You know, even with our longs, they are a little bit more scaled back. You know, previously we had a ratio of like 2 longs for every short. Now it's more like 1.46, so things are getting reeled in a little bit, and that is a good sign. But again, overall, we are still looking at a situation where we've rallied by quite a bit and shown all the same hallmark signs of a classic bear market rally, where within an existing very long-term bear market, we rally up, we, you know, enter some liquidity zones, we, you know, trap people in long positions that are very high up, and so on and so forth, and then the market you know, drops the ball again. It's very common. It happens all the time in bear markets. I'm not going to show you in this video, but you can just go back on the charts and you'll see this. There's absolutely no denying it. And so the reason that I think this is all very, very important is if we are going to be potentially continuing this downtrend that we're in, you know, well, yeah, we could be looking at dropping by quite a bit, because the thing with Ethereum in this range is that it doesn't have any support that I'm seeing from basically where it is right now down to this area where Ethereum was getting rejected at $1270, $1,270. This was an important level way back in February of 2021. We also found a little bit of resistance here in January and February of 2021. So, you know, a little bit of support, some nice resistance and support pairings as well. You know, this is the next logical level for Ethereum to fall down to if we lose this area, but it's quite far down, guys. This is a 25% drop. So I don't want you guys to be taking this lightly. And the thing is because I don't see much support in this range, I think it's going to be very hard for Ethereum to capture any bounces until we get down here. You know, short term, yes, absolutely, we could have you know, some bounces that take us up like this again, but for the most part, you know, there's just not much that I think could help Ethereum until we fall down there. And it's a similar case for Bitcoin, you know. So this is the picture right now, is the markets are at resistance. There's a beautiful opportunity if we were going to break them. Like I said, Ethereum to 2.5, Bitcoin basically could go up to to 22.7, maybe even substantially higher, but that's if we break the resistance. And I'll get to the resistance again in just a bit, because there's actually something else really, really important that I haven't shown you yet in this video, and I do want to talk about that. But you know, we look at where Bitcoin could be going. And this is the thing, guys, is there is potentially, you know, quite a nasty drop for Bitcoin as well. It's definitely not as bad as Ethereum, but I think we are going to have to drop down to, yeah, perhaps like just that $20,000 area, something a little bit like this, you know, and that is, it's not bad. It's just a 7% move. I honestly don't think people are going to be too upset by this, but I don't know. The market has been surprising me in terms of how emotionally vulnerable people are right now. I mean, really just rubber banding between different ideas a little bit too much. Kind of caught me off guard. I thought people would be a little bit more mentally stable, but oops, my bad. And so in any case, I think, yeah, potentially a little bit of a drop to come would make sense. Now, is it going to be a disaster for the market? Not necessarily, guys. You know, I think if people start getting really, really bearish, very, very upset, you know, if we start to see this fucking long ratio finally come back down towards 50-50, or, you know, something a little bit more bearish, then yeah, I think if people start getting really, really upset and thinking that everything is going down to zero before we get down to 17, as long as that happens at any point before 17, I think we're good. You know, if we fall down to 17K and people are still hopeful that we're going to get a bounce off this level and so on, well then yeah, we might not, and we might actually be looking at recontinuing this downtrend. Now here's the thing with Ethereum specifically. Quite a bit of important resistance here, proving for you know, just very, very exciting trading opportunities, guys. I just want to remind you as well, by the way, that you know, when you're watching this YouTube channel, you can get over $4,000 by signing up to the main exchange that I trust with my trading activities. It's Bybit. It's linked below. There is the description looks slightly different now, but it's very obvious. You'll see it. It's probably going to be under the tools and websites I use section of the description. Literally just scroll down, get your free money. There is a tutorial on how to do this as well somewhere in the description, but if not, it's super simple. Again, just sign up and the steps will be there. Actually, it'll take you like 2.5 minutes. I did it on video, 2.5 minutes to do this from start to finish, and you get your rewards as well. So well worth checking out, and it is, like I said, the main exchange I like to use. And again, the reason that this is exciting is because I am seeing potentially a lot of like whiplash volatility coming in very, very quickly, just extreme potential breakouts, you know, which make for really, really nice trades. But here's the thing with Ethereum, is that because we ended up peaking over here, we have started to form a little bit of resistance. Now take a look at this on the 4-hour time frame. Now previously this Ichimoku cloud was acting as really nice support for Ethereum. Now we are potentially just trading right into a resistance cloud for Ethereum, and the fact that it lines up with my existing you know, resistance area, I mean, I can't make this up, guys. This you know, this is a beautiful, beautiful display of how technical analysis just works. You know, but we were looking at this area of resistance potentially being problematic for Ethereum, and yeah, basically right here we are in a situation, I would say, where you know, we're trading right into a potential danger zone. We look at momentum on the 4-hour, and it's not great, but it's not bad either. either. I would say it's definitely not great though. On the daily, it's not so good. On the daily, you know, this is pretty clear to me that we are, you know, we've fallen below momentum. We're potentially challenging it now to come back down. You know, if we're able to rise a little bit higher into this range, like I said, that level to beat for me is going to be basically anywhere, you know, substantially above 1800. Like, you know, 1900 would be nice if we can get at least above there. You know, I'll start to think that we've actually cleared this resistance zone. But for now, guys, it's actually a very clean chart. You know, what's been drawn right here. I don't think that there's many people that would challenge my analysis on this one. You know, it's pretty straightforward. It's pretty obvious what we're looking at. As far as I'm concerned, this was a major bounce zone for Ethereum. We've fallen below it, potentially getting ready to capture a little bit of resistance. It lines up with the Ichimoku cloud. It lines up with the daily EMA ribbon. It lines up with, yeah, just this pre-existing horizontal resistance area. You know, there's a lot of things that could potentially be harmful, and not a lot that to me indicates the market is going to keep rallying up. I suppose the only nice thing that I can see about this, and it is actually quite a very good sign for Ethereum actually, is the Fibonacci retracement, guys. Take a look at this. If I draw this from the absolute low to our high of this short-term trend, it's pretty clear that Ethereum actually managed to fall down to that beautiful 382 retracement area, and is now potentially on its way back up. So that's nice. I do like that, and that does, you know, the next question as well, will 236 act as resistance? Because it did act as resistance before. You know, generally the 236 level is not going to be a problem for the market in my experience, so I'm not actually very worried about it. Just looking at the Fibonacci retracement, like I said, this is one of the good signs that the market has got. The other one is just, yeah, generally sentiment is poor. You know, but again, it's not reflected where the numbers are. You know, we look at the longs and they're still majority longs. So, you know, some of these bullish factors don't even add up, you know, as far as I'm concerned. So it's still it's a tricky conversation. And for me, the key thing is just seeing, do we end up punching in a lower high? You know, if we start to get a rejection, you know, if we manage to trade all the way up here and then get smacked back down to here, that's going to be an indication to me that this may have potentially been a high. And if it has been a high, which is, you know, now lower, in conjunction with a lower low as well, you know, that's a really, really big sign that this thing could be ready to collapse. And by the way, this is how big collapses always happen. I just want to remind you guys about this. If you never even learned about this, then you need to get inside the 𝗧𝗡𝗡𝗏 Academy. You need to be inside of 𝗧𝗡𝗏 VIP, because guys, really, by now you should know about this. We're more than halfway into 2022. You know, the market is quiet right now. There's not a whole lot of things going on overall compared to what was happening before. So if you're still not learning this stuff, you're going to be at a really, really big disadvantage, ladies and gents. So what I'm putting forward inside of 𝗧𝗡𝗏 VIP is giving you all the information on absolutely every trade I'm making from start to finish, from my planning phase to my execution phase, telling you where I'm entering, where I'm putting my stop loss, my leverage, and so on and so forth, and then giving you real-time updates on those trades. And that's really cool. But the cool part to me is that I'm explaining every single decision that I'm making. It's basically my trading journal, and then alongside that, most people who join are actually going to be getting free access into my course, where I'm teaching you about these things anyway. So really, really important stuff. But and again, here's the thing, is that this is a very, very important thing to keep in mind, is the market likes to punch in a high right here. Look at the low over here as well. And then we punch in a lower high and a lower low. And at this point, we basically have a confirmed downtrend, ladies and gents. Look at this, very, very clear confirmed downtrend, you know, with our patterns of lower highs and our patterns of lower lows. Very, very, very common. It happens on very large time frames. It happens on small time frames. It's just naturally, I mean, really what it means, if you're curious about the kind of psychology behind this, or whatever the word is, you know, we were able to punch this high in, but the next time the market didn't carry enough strength to get high enough, you know, so essentially it's like, you know, somebody's just gotten punched in the face in the ring, in the boxing ring. He's trying to get up now, but he can't get back on his feet, so he drops even lower. That's what we're looking at with the charts. This is exactly the same thing right here. So definitely something to be keeping in mind right now, ladies and gents. You know, we're in exactly the perfect range for all of these things to go wrong. Does it mean they're going to go wrong? Absolutely not. But again, my job as a trader and as an analyst is to simply play these probabilities. So there you go. If you want to see how I'm going to be doing it, it's on screen right here. It's always the first link in the description down below. And if you want to get some free cash by trading on the main exchange that I trust with my trading activities, you're going to find it in the description down below as well. So there you go. Really hope you have enjoyed this one. You know what to do if you have. Hit up the likes, subscribe, tick the bell, and I'll see you all in the next one. Bye bye.